Hello and welcome. You're watching Money 9. I'm Sakshi Batra, and on this show, we discuss all about markets and fundamentals and help you understand. I will be joined by a very special guest who will help us understand which way are the markets really headed from here. Where are the pockets that you can be invested in to make maximum amount of profits? I have with me Mr. Kranti Batini joining in from Wealth Mill Securities on this edition of Market Meter. Good afternoon, Mr. Patini, and thank you very much for taking out time for us. Well, 2 days history has been made, and yet again, today in the world of sports, again, we have seen a history being created yet again, too, with the men's hockey team winning Olympics and, winning bronze for us against Germany. So it's good news flowing in so far this week. It's Thursday today, and we've seen historic highs on the Nifty, on the Sensex. The markets are holding up strong above those levels, which were awaited from a long time, apart about 8 odd weeks or so. Your thoughts on the markets and how are they going to move forward from here?
Sakshi, absolutely correct. We are at the right times. And since we started our shows, there is something to worry every week. But markets have been moving up higher. And today we are at a momentous occasion of both Sensex and Nifty trending at an all-time high, despite of the negative sentiment over there that's coming on the news. But positively, if we have to analyze the factors that led the market to stay and come to this all-time high is the macro indicators are coming back to its normalcy, and also the manufacturing activity across India has been resumed completely.
Right.
And GST collection has been for the month of July is more than 1 lakh crores. And uh, and if I have to name the different various parameters are quite encouraging. It's showing the resilience that are there in the macroeconomic story of India. And one thing
Hmm.
we need to remember is 43 lakhs, sorry, 43 crores of Indians are aged between 18 to 35. These are the
Hmm.
driving factor for this market, and these are the driving factors of consumption. That's why we
Sure.
can see the resilience of the consumption story across of the various parameters, and also the PMI index, manager index, which shows the future order book of the companies is at right now for the month of July is above 55, which is a
Correct.
positive indicator. So altogether, that everything factors into the markets, and that's why we are here today at Nifty above 16,000 levels and Sensex trending above all-time highs.
Absolutely. So we have all those highs and the factors, macro factors, all of them working in tandem. And we do have the vaccination drive, which is increasing the Q1 numbers, which are beating estimates on a lot of fronts as well. All of them supporting the markets at this point in time. And not to forget the exuberance in the primary market space as well, and the kind of participation that we are seeing from all walks, especially the retail investors who are, not, their interest and their participation in the IPOs is just not waning anymore. And you are seeing four IPOs opening up on, a single day, and all of them up for grabs, all of them getting subscribed on day one, all of this enthusiasm there. So how are you advising viewers, investors to really, approach the markets right now? Is it time to be aggressive? Is it time to be cautious? Is it time to tread very, very carefully? What would you really say to them?
Sakshi, at present, okay, caution is always needed in the market. Okay, that's the word. Always, you get a suggestion from any stock market expert in stock market.
Right.
There will not be a day where we'll be careless in stock market. Caution is
Yes.
always needed, but the kind of caution where it's needed is especially the gross errors can happen when the market is in a bullish mode. In a bear
Mm.
market, you will be very selective in terms of selecting the stocks and identifying the sector and also the management. But the problem with the bull market is everything you look around looks very good.
Mm.
As we always say, there are uh, stock specifications like large cap, mid cap, small cap, micro cap sometimes. Okay, but there is one more thing that is crap cap. We call it as a bangar cap. Okay, on stock exchanges, nearly 5,000 stocks get listed on stock exchange, but the quality remains limited to a few of the pyramid on the top of the pyramid or middle of the pyramid. But investors at this point of time, because the lot of news, the messages, the social media is buzzing around here and there, they need to be should not get into a trap at this point of time, getting into some penny stock cap in their portfolio. That's why they need to be extremely cautious what they are buying, how their fundamentals, what is the quality of the management, how things are going to be panned out. Right now, there is a holozation that goes into these small penny stocks. Uh,
Sure.
they attach a tag. This is going to be a different story in the days to come, and the poor retail investors, even HNI investors, tend to get into that trap. They need to be very extra cautious. Always stick to quality. Don't compromise on quality. Probably these stocks, what the Bangar cap, the scrap cap I'm talking about, they might run. They might look like gold in a coal mine, but they need to be extremely cautious in terms of selecting a stock at this juncture. That's what the retail investor should be very cautious while selecting the stock. You might miss a
Absolutely.
small value, but stick to quality always.
Right, so absolutely pointed out, at the right time, because, on a day like today, in fact, this entire week, when we saw the Nifty first climbing at 16,000, we saw the entire market. There was a broad-based rally. But when the Sensex climbed over 54,000, we actually saw it was only the creme de la creme that was supporting the kind of rally that we had seen and topping those charts. From yesterday until today, we are seeing constant sell-off beneath the surface. All of those stocks that have had a very sharp run up, most of the companies which are in the small caps, because the weaker hands are actually getting thrown off, and we are seeing all of those companies which have huge debt on their books also fall very, very sharply on a day like even today. So that's something that you have really pointed out very clearly for all the investors, not to run after everything that is going up in the markets, but be very careful, choosy, and stick with quality at this point in time. Let's talk about a few stocks. I wanted to ask, since we've talked about these companies which have had huge debt on their books, I have to ask you about Vodafone Idea. The stock is down about 40% this week. And there were definitely concerns around Vodafone Idea from a long, long time on the kind of debt that they have on the books, the AGR case that is constantly running and requiring Vodafone Idea to come up with about 25,000 odd crore rupees to pay. We also saw Kumar Mangalam Birla now stepping down as the non-executive chairman, and after that the stock has fallen about 10-15% in just like a single day. It's trading at below 5 rupees now. Your thoughts on what the news developments really mean for the company, and after this kind of a sharp move, how are you seeing the prospects of this company?
Sakshi, one thing, as you rightly pointed out, investors need to understand the dynamics of the sector. See, the telecom is a much happening sector. Without telecom, we can't live at this present
Sure.
juncture at these current times. But the the industry is suffering. From 26 companies of telecom companies, we are right now at two and a half. That means the Vodafone is half dead. In terms of the numbers are concerned, if Birla cannot handle the thing and he is stepping down as a chairman of the company, you can understand the dire consequences on that company at present. As an investment, investors need to be very cautious while selecting these kind, understanding these dynamics. And as an investment at Voda is concerned, it is not for a retail investor. It's going to be it depends upon many number of moving factors. It can be the
Mhm.
AZR, how the competition right now, and also the margins have been shrinking in this business for
Mhm.
Voda, and also the subscriber base has been coming down drastically. Of course, I do, on a disclosure, I do carry Vodafone number, not the Vodafone stock. Uh,
Sure.
but investors at this point of time, if they want to make, it is just a mere speculation. Okay, I'm not going to make any kind of, probably the stock might go up. Who knows, if some positive indication comes, if the management itself not in a position to infuse extra equity in the business, so how can a retail investor go and buy that stock? This is the bigger question. One need to understand those people who are buying the stock. But we need to see uh, how the capital infusion is going to happen in the company. That is very crucial. Whether the Vodafone is going to infuse the capital further, or the government is giving some relaxation. That's what we need to wait and watch, how the things going to pan out that comes from the government in terms of their a plan of their restructuring of AGR dues, or a repayment plan for AGR dues. How it's going to come, all these factors will depend upon this particular stock movement. But it's a pure speculation in terms of buying what is concerned. who knows? It's like a lottery ticket. If you buy, if odds are in your favor, in the investor's favor, it might turn out. But for a retail investor, it's not a stock to be in. There are many good quality companies, good companies with the highest visibility of earnings are available. But if you want to speculate, any investor want to speculate, they can speculate, because the stock market capitalization currently at 15,000 crores, and also the price is just 5 rupees. It's just a uh,
Penny
coffee
stock.
bite kind of price.
Absolutely, absolutely. You're right. I also wanted to ask you, in the last few odd months or years, we have seen a whole shift of subscriber base from Voda to Bharti Airtel and to Reliance Jio. And it's becoming kind of a duopoly market right now, just like how you pointed out. You are still sticking on to that number. Are you also looking to shift out, looking at the kind of developments that there are, being seen?
Uh, Sakshi, let's wait for the things how it's going to pan out. I have been waiting with this number from quite a long time, so I'm still holding on to just see the things that's going to pan out over a period of time.
Sure,
Whether it's going to be
absolutely.
a oligopoly or a duopoly or a monopoly, we need to tell.
Absolutely. No, I just wanted to ask that because, I got inquisitive because you're holding on to that number, like a loyal customer, and I'm sure Vodafone will be very happy.
But uh,
to-
but I just give a point. When I always think about the Vodafone, the stock. Okay, I used to pay a bill of 2,000 rupees earlier, but now with the same kind of service, extra kind of service, I'm just my bill will come half of that thing. So I can understand the subscriber base is shrinking, and also the pricing has at a very competitive. So how the industry, how the company can survive? That's the major
Absolutely. Competitive margins are extremely going to be very tough to maintain at this kind of pricing and the competitive pricing that they are launching and the tariffs that they have been launching because of the competitive tariffs launched by Geo first. Although there are some hikes now coming in from Bharti, so there is an expectation of the some companies' improvement and the telecom sector improving. But you just pointed out very rightly for all the investors. I wanted to ask you, for all those investors who got into the stock in the recent run up at around 12 rupees, hoping that the things will improve, and they are now seeing a slash, a cut of about 50 odd percent or more, 50, 70 odd percent of their investment. What were you advising to them? Any frantic calls that you're getting from the clients, what are you telling them?
See, as a disclosure, we don't have any position towards Vada, but as a retail investor, if anyone bought this stock to make a speculation, of course, speculation comes up with a tag that is the risk, inherent risk in that speculative mode. But they can hold on at this point of time. There is no immediate danger with respect to the company operations are concerned. We need to wait for a week how the government AGR dues. That's going to be a big announcement for this company. Fundamentals are concerned. So if they get any relaxation from the government of India with respect to the AGR dues are concerned, it's going to be a major booster for Vodafone Idea. And if the parent, because of the love on the company, if they are ready to infuse some kind of capital, that's going to give a further booster to the stock. So at this juncture, it's not a buy. Those people who bought already are there in the counter. They can hold on, just to wait how the things are going to pan out in the coming days.
Understood. Understood. Let's now move on to understanding your specific stocks. In fact, some of the star picks that you've recommended to all the viewers, all of those who are stuck in Vodafone, there is a tough luck that you are facing right now. No advice to invest afresh. But definitely for all those who are holding on to big losses can wait for a little bit of clarity and then take a decision on this as advised by Mr. Batini right here. But let's talk about his star picks, all of those stocks that have really performed very, very well. And let's start off with Rain Industries and Schneider Electric. These two stocks you had recommended on our show, and congratulations to you. The stocks have done phenomenally well in the recent times, and about 70-80% of peak returns is what we have already seen. Your advice on both these stocks, what would you say to all those investors who got on your advice today?
Sakshi, with respect to the Rain Industries is concerned, okay, the stock has the company has posted very good results. Currently, the stock as we advised at 150, the stock had a peak return of 81%. So, what we believe is whatever be the results the company has declared, it's factored into the price. So I educate investors to book some profit at this time, at least 50% of your holding, since the stock has run away nearly last 6 months, nearly 80%. So try to book some profit from the table and stay invested at the remaining. And if market gives any dip, they can re-enter into this stock, because calcium coke is one of the key raw material in manufacturing of alumina and aluminum. So since the metal story is reviving, Rain Industries had followed the suit uh, in terms of uh, giving the better margin for the company and also in terms of the earnings. So at this juncture, since the stock has run up a lot, nearly 81%, book some profit from the table and remain invested and stay invested in this company.
Right. So that's about Rain Industries. What about Schneider?
Schneider is a power infrastructure story, Sakshi. So the stock also has a run up from 120, sorry, 102 rupees to it went to nearly up by 57% the time we advise it to our investors. But technically, it shows the stock is not able to sustain above around 150 range. Since currently it's trading at 140, the stock has given 57% returns to the investors. They can book some profit from the table. It's have a good pedigree, but the stock has to really perform well in the coming days in terms of their P&L is concerned. They need to give more visibility with respect to their earnings are concerned. So
Sure.
as it given a tremendous return of nearly 57%, we do in this stock also book some profit from the table, but the remaining quantity stay invested in Strider Electric Infra. As we are going to progress the many of the smart cities that are going to come up, and also the power infrastructure, government is going to emphasis on power infrastructure in India. So the
Yeah.
power infrastructure stocks are going to do well in the coming days. But with respect to Schneider, since the stock has run up, they can book some profit from the table.
Okay, understood that. And what would be your new pick for the day? What are you recommending to our viewers?
Sakshi, this week we have a different stock that is called BCL Industries. The stock market capitalization is 600 crores, and the business divisions, the manufacturing divisions of this company, they are into three types of significant manufacturing divisions. One is the edible oil. The second one is ENA, that is extra uh, neutral uh, uh, alcohol, ENA, and the third one is ethanol. So these are the three segments for this company. But what I liked in this company is the edible oil business is doing extremely good. ENA is stable, and also what I like in this company is, as you all aware about the uh, uh, new fuel policy that is blending
Sure.
of 20% of ethanol in fuels, 20% by 2025. There will be a demand for the ethanol in India. What I
Hmm.
like from this company is they manufacture ethanol from grains. Nearly 2 lakhs quantity of grains have been wasted in India, in the barns and
Sure.
in the godowns. So these guys manufacture ethanol, extract ethanol from grains, and they're supplying to the oil marketing companies
Right.
and the different uh, refineries are concerned.
Right.
So this is the part I like. And
Okay.
also, as when you investor remember about ethanol story, they run
Yeah.
about to the sugar stocks are concerned. But this is a
Absolutely.
stock, this is a pure ethanol play. So investors can definitely look into this stock with a time horizon of 1 year, and the stock can and buy the stock at every dip. If at all it gives any dip to the investors, it's going to be a good investment story over a period of time.
Absolutely. Well, wonderful to hear that. BCL Industries over the next 1 year, 25% is what you could expect from the current levels, and a whole lot of factors going to be benefiting the company going forward from here. Thank you very much, Mr. Padini. It's been a pleasure speaking with you, as is always, and taking insights on the markets and these particular stocks that you always recommend to our viewers.
Thank you, Sakshi. Pleasure is mine always.
All right, let's move on to now see how the markets are really trading at this point in time. For the benchmark indices, they're back above the flat line, and you can see about 1/10% gain for the Sensex and the Nifty, again trading near all-time high levels. The Nifty Bank is still in the red, about 0.5% down in trade, and so are the broader markets that are still trading with some losses at this point in time. Let's move on to see how the sectors are performing at this point. Most of the sectors are in the red. There's a weaker performance that you're seeing from PSU banks that are seeing some profit booking taking place. Media stocks are down in trade, and weakness is continuing in the realty space as well. But what's providing some kind of support to the markets is the IT space, that's up about 0.7% in trade. Metals are also shining bright, and so is the pharma index that is seeing some healthy gains coming up. Let's also look at the Nifty 50 gainers and losers at this point in time. For the gainers, it's Bharti Airtel, that's up over 6% now. Sharp rise there. Eicher Motors, Tech Mahindra, HCL Technologies, and JSW Steel. So some metal counters, IT space, and the telecom major that are up and about in trade today. As far as the laggards are concerned, you'll find some of the names coming in from the banks and the financial space again, especially the PSU banking space. SBI is down 2.5% after clocking in those record high levels, although the brokerage house reports are quite positive on the stock and the long-term story that the bank has. IndusInd Bank, Bajaj Finance, ICICI Bank, and UPL are the other counters that are down about 1.5 to 2.5% in trade. Overall, the market breadth is favoring the declines at this point in time. The markets are still holding above that flat line. We'll just have to wait for the last 2.5 hours to understand, whether the bulls show some sign of continuing this momentum for the next trading session. That's the last trading session of the week as well. We'll keep you posted on all of that. So stay connected with us. Like and subscribe to our YouTube channel, hit that bell icon. Also stay connected with us through all our social media platforms and visit our website money9.com. That's both in English and in Hindi, and you get to read up all the latest news articles on markets and on personal finance. Thanks for tuning in.